Hey there traders, welcome back for another free video from the stockbandit.com. I just want to take a look at the indices here as we head into a brand new week. Last week the market suffered. We got off to a decent start early in the week, and then we faltered Tuesday, Wednesday, Thursday, Friday, and ended up a decent amount shy of where we had been earlier in the week. So we saw each of the indices post losses. Let me just walk you through some important levels I think belong on the radar in the days ahead. Let's start off with the Nasdaq here, which has potential to have just created a lower high. Okay, we had 31, 34 back here several weeks back, and then last week we topped out right up here around 30.80. Okay, we got to 38.85 on Tuesday, and then we finished about 130 points beneath that. On the week, the Nasdaq gave up 3.6%. We're now sitting just above this short-term support zone, which is 29.46. And if we happen to get through there, the next level to watch is going to be back here at 28.87. That was the 52-week high from a year ago, the May high from last year, the Bin Laden high. So keep an eye on 28.87 as we may be headed for a push toward there. On the way back up, keep an eye first of all for this gap right here to possibly be filled. That goes up to Thursday's close at 30.16. For the S&P, we saw this index give up 2.4%. Keep a very important trend line up here at this 1414 level. It's a number I've noted a number of times. We got right up to it on Tuesday. We actually pushed through it by 1 point, and then we sold off pretty good from there, going out at 1370, which is also a very important level. That was the high from last May, and so it's served as a zone of resistance here earlier in the spring, and then over the past few weeks it's been serving as some support. Now we're back here testing that same zone. If we get through there, we need to take a look at this level right here, which is 1357, a level that's been tested a few times over the past several weeks. And then if we get through there, we'll need to start looking at some lower levels as possibly a downside exit from this range would indicate a little bit more longer lasting change of direction. It's still too early to call for that. At this point, we're still range bound, and so we need to be respectful of that. For the let me talk about the Russell first. Last week, well, here's a key level for the Russell, which is 815, and we've been dealing with it a ton, and you can see just how valid this level has been. But we got through it the week before last, and last week we approached this 833, which is where this white line is. You see that 833 has been a big resistance zone. We flirted with breakouts through there, but in none of those cases were we able to stick above it. Last week we got to 830 and change, and then we abruptly turned lower. Now we're just a short distance from this 784 zone. If we get through there, we could expect that the small caps are going to start entering a correction, but at this point they're just moving lower within their range, so we need to be aware of that. And then finally for the Dow, which is really in a 600 point range, we've got 12.7 down here, this lower level here, and then we've got 13.3 up here. So that's 600 points. If we get, and you can see that as of Friday we closed really right near this 13,000, which is smack dab in the middle of this range. So it's difficult to be excited one way or the other. You can't really say this is a bearish breakdown, and you can't say this is a dip to be bought aggressively just yet. We may move lower within this range, but overall these are the two lines to be watching, 12.7 and 13.3, because until we get out of this range, you can expect more of the same of this back and forth indecision, in which case it's just a trader's market. So if you're looking for some trades to add to your own, check us out at thestockbandit.com. Aside from that, thanks for joining me for this video. I will be back with you soon with more, but until then, trade like a bandit.